Welcome back. You're watching Investors Guide in ET now. Thank you for staying with us. We're going to try and answer as many questions as we can about your asset allocation. Feroze Azeez from Anand Rathi Private Wealth Management joins us. Feroze, thank you for joining us on the show. Our first question comes in from 24-year-old Ankur. Ankur tells us he'd like to buy a home in the next 7 years. So he wants to set aside about 4,000 rupees every month. He also has to pay for his education loan. Now, he'd like to divide his investments between equity and the PPF. And he wants to know what the right mix is for that money. Well, first of all, Ankur, you should pay off your education loan, as the schedule is, because you do get a tax benefit on the interest that you pay. So that's something that is always an added benefit for a 24-year-old on your salary. Well, Feroze, if you were to help him split up that money, I'm not a big fan of the PPF. What would you recommend he does?
I think all your money should be invested in equity because you have 8 years to buy your home, and I think that's going to be a steep ask of a down payment even if you choose to take a home loan. So equity is going to be the vehicle, and some degree of debt just from a contingency perspective to absorb the volatility of the equity could be okay, but choosing PPF will not be a good idea because debt mutual funds can actually do the same thing in a better fashion because PPFs will have lock-in and other complications. In the equity category, you can look at two funds. One would be the ICICI Focus Blue Chip Fund, and in the mid-cap category you can look at Sundaram Smile Fund. These are two good funds which you can look at. In the debt category you can look at Reliance Corporate Bond Fund. I think these are the three funds you can invest in, and I think predominantly it should be equity so that you are able to buy your house when you're turning 32.
Our next question comes in from Suman Mishra. He says he has a lump sum of 10 lakh rupees. He'd like to invest for a term of 2 to 3 years. He wants to save on tax. What would you recommend, Feroze?
See, if you're investing for the short run, of course debt is going to be the one vehicle which can be used, because long term is when the equity volatility is actually smoothened out and actually the risk becomes notional. Since you've mentioned short term, as long as it's greater than 2-3 years, since you already have an ELSS exposure which you wish to take, I think that will be the more equities portion of it. The rest of it, I think you should look at doing debt because of the short term nature. So in the ELSS category, I'll recommend you an Access long-term equity fund, which is a very good ELSS. Now coming to the residual portion, which should be in debt because of the short-term nature, you can look at ICICI regular savings fund and look at a dynamic bond fund, maybe an SBI dynamic bond fund.
Last question from Sachin. Has been investing 2,000 rupees a month in HDFC Prudence and 1,000 rupees in the iPru US Blue Chip Long-Term Fund. He wants to know if he's on the right track. He has some extra money of 3,000 rupees. He'd like to allocate that money. But I want you to take a step back and look at why you're investing in these funds in particular. There doesn't seem to be any core holding in your portfolio. Feroze, would you recommend a core holding, please?
I think it's a very good pick, ICICI Focus Blue Chip from a long period perspective. Then if you move to the other fund which you have, which is the HDFC Prudence Fund, it's a balanced fund. I would definitely not want to choose from long-term perspective a debt and an equity fund which is combined in one fund. So move that to maybe a Sundaram Smile Fund. I think that will be a better strategy from a long-term standpoint. And then I think the third, the extra money which you have, I think you can invest in Birla Frontline, which is again a large cap fund, because then you will have two large cap funds, one mid cap fund. I think that will be better.
That's a wrap on this week's Investors Guide. Remember, you can always write to us with your questions. We're right here, and we will be week after week to help you with anything to do with your money. Tune in next week and catch the show. Thanks for watching.